Hey traders, Raghee here. This morning's open was an interesting one because it's one of the things we watch out for. Now, not all that long ago I did a video called the 5 cautions, and those are the events that happen, things like end of month, end of quarter, witching, FOMC, any kind of FOMC speak and non-farm payroll that tend to affect follow-through. But what about market structure? One of the earliest signs that we're lacking structure is when you might get a breakdown in one of the index futures contracts, but you get actually a breakout within the same window to the upside in another of the index futures contracts. And that's exactly what happened today. The Dow broke down, and that was actually a great trade that we took at 9:45 Eastern, or the 15-minute clearing, and then we had a post 10 o'clock, post end of the opening range breakout to the upside. So once the clearing was done, which is the first 30 minutes of the day, we saw the structure on the Dow remain bearish, but the structure on the NASDAQ became very suddenly bullish, led mostly by Amazon. And we saw a breakout here. And, as we got closer and closer to 7,700, we knew that we wanted to step out in front of size because there'd be pressure waiting at that major psychological level. That's ultimately what happened. But this is where the Dow was a short and then the NASDAQ was a buy. Now, they're both valid. I will typically start to take a smaller position size when we have these kinds of mixed signals. When we have this sort of warning. This is the market sending a warning across the bow, kind of a warning shot where we don't have the clarity in terms of broader risk appetite or risk aversion. If you want to buy stocks, you want to buy stocks. But if things are that segmented, we know the follow through can be pretty difficult. So we also knew that the NASDAQ was battling with the volume weighted average price throughout the morning. And until I can see some sort of clear, either above that middle line or below that middle line, that volume weighted average price, we see some clarity, it's tough to have a really clear bias. Now contrast that with the Dow from this morning, and it didn't take very long for the Dow to cross down through the volume weighted average price. And if you have a 930 anchor on this, and you're looking at this from the standpoint of just from the open, this was already plummeting through the volume weighted average price shortly after the bell, which makes the bias for more downside really very simple. But just a quick heads up, when you see these kind of mixed markets, keep a tighter leash. Look for near-term profit targets. Don't look for one of those great follow-through days unless you're in an environment where one of the heavily weighted names within the index futures is starting to give you a heads up about the market direction because of its weighting, especially during earnings season. I also wanted to let you all know of a free event I have coming up day after tomorrow, April 18th, which is a Thursday, 7 p.m. Central, 8 p.m. Eastern, and I'm going to be talking about market flow, decoding market flow. And this is a process of understanding market and volume profile, understanding tools that use price and volume and even time to a certain extent, like the volume weighted average price. We look at time with something like a market profile. But if you've been curious about these kinds of tools, what to take away from these tools, what they tell you about big money flow, what the big institutions, what the big money is doing, you're definitely going to want to check this out. So this is going to be 7 p.m. Central on Thursday. I'm going to talk to you about how we gauge this, why we use the tools that we do, and why, even though these are tools that are typically freely available, most folks, A, don't use them, B, they don't know why they're so important, and if they do use them, oftentimes they tend to use them incorrectly. So I'm going to address all three of those things on Thursday. It's definitely going to be a needle mover for actually all three of your probably trading approaches, which is short term, sort of daily time frame, or what we can call intermediate, and also longer term positions, gang, whether those be longer term buy and holds or whether those be investments and restructuring your portfolio. This is going to affect all three of those sort of baskets, those buckets that all of us as traders keep an eye on. So that's simplertrading.com/flow, and I'll see you on Thursday. All right, catch you in the next update.